Most families are blindsided when they learn how much Medicaid can cost them, but today I'm going to reveal the big secret that nursing homes don't want you to know. And trust me, this information can save you and your loved ones from losing everything. Hi, I'm estate planning attorney Mike Smith with Smith Barid LLC, and I'm one half of the estate planning guys. If you're thinking about long-term care for a loved one, you need to know what Medicaid and nursing homes don't really want you to know, and they won't tell you before it's too late. By the end of this video, you'll understand how to avoid Medicaid spend downs, asset depletion, and the estate recovery trap that nursing homes often fail to mention. So let me walk you through a typical scenario. We'll call this couple John and Mary. So John and Mary have been married for about 40 years, and after John suffers a stroke, he needs to move into a nursing home. Now, here's where things get tricky. When they arrive, the nursing home, usually some sort of financial director, they call them, or Medicaid specialist sometimes. The nursing home walks Mary through the process and they inform her how John's care needs to be paid for. And they explain the basics, but what they don't tell her is how Medicaid could drain their savings before stepping in to help. So Mary's told that the assets that she and John have accumulated, including John's life insurance policy, need to be liquidated. In most states, this means reducing John's personal assets to just $2,000. So Mary's told that they're gonna have to spend down John's assets to $2,000. And until then, Medicaid won't provide any coverage at all. And this is where many families are caught off guard. They're forced to spend on nearly everything that they have to get qualified for Medicaid. What I'm about to tell you is probably not what you're expecting. Mary talks with the financial advisor that they've been using for years, and the financial advisor explains the next step. Mary can keep a portion of their savings, their assets, but the rest of it has to go. Everything they work for is suddenly reduced, and John can only keep $2,000 in assets. Now, Mary can keep some assets as well. That portion that Mary gets to keep is called the Community Spouse Resource Allowance, and that number changes every year, but it's a small portion of the assets that John and Mary have accumulated over the years. Now, this is shocking, right? But that's not even the worst part. Once John qualifies for Medicaid, most of his income will go directly to the nursing home. And then Mary's allowed to keep her own income, but oftentimes it's not enough. And this leaves her struggling to cover her living expenses with a drastically reduced budget. And this is a situation that many families simply just don't see coming when they think about long-term care. Now, here's another thing that most people never hear about. It's called estate recovery. After John passes away, the state places a lien on their home or whatever other assets they have to recover the Medicaid costs. And oftentimes there's some small amount that's exempt. $25,000 could be a little bit more, could be a little bit less. But if Mary decides that she wants to sell the home that she and John own together, she doesn't get the full proceeds of that. The state comes in and takes their share from whatever the proceeds are first. Now, if she keeps the home will be exempt during her lifetime, but then if the kids inherit the home from Mary's estate, Medicaid's gonna step in and recover from the estate after Mary passes away. This is absolutely devastating for families who thought that they were, protecting their assets. But here's the big secret. Nursing homes don't tell you this because they have an economic interest in having you private pay. They can receive more from a private pay rate, a private pay patient, than they will from a Medicaid patient. But here's the big secret. None of this has to happen. We help families all the time avoid the nightmare of long-term care with proper estate planning. And there's different ways that you can pay for long-term care. The first one is obviously you can pay out of your pocket, and some folks might be able to do that, but the reality is for a lot of folks, that's just out of reach because nursing home costs are extremely high and they continue to outpace the pace of inflation. So that is not necessarily an option for a lot of people. The second option that you have is you can use long-term care insurance to pay for nursing home care, assisted living care, memory care. It can pretty much cover everything. Long-term care policies have changed a lot over the years. Traditional long-term care insurance worked in the same way as kind of automobile insurance. You paid premiums and then you filed a claim if you had one and you were reimbursed from the policy. And the problem with that is a lot of people never used the policy, didn't wind up going into a nursing home or needing any kind of care. And they're very expensive too. So those have become less popular. And there's a new type of long-term care policy that's available. It's a life insurance policy with long-term care benefits. And that means that if you never use the long-term care insurance, then that life insurance benefit is available for your family, the death benefit after you pass away. And likewise, if you needed to borrow the money out of the policy, you can take the money from the policy tax-free. Some of your investment money and putting that into a separate bucket that you can use to pay for long-term care. And we offer workshops on these strategies. If you're ever interested in learning more, be sure to stay tuned for when we'll be offering one of those workshops. The other way that you can pay for long-term care is through Medicaid. And I've talked a little bit about the requirements for that, but the reality is that if we plan ahead, we can put together an estate plan that will allow you to qualify for Medicaid and protect the assets that you've spent a lifetime accumulating. We use things like trusts and other strategies to put you in a position to qualify for Medicaid if you need it. And again, we offer education about these strategies and how to approach that, so stay tuned if you want to listen to one of those workshops, or if you need help now, feel free to schedule a free discovery call with my office. There's a link down below where someone on our team can talk to you about what we may be able to do to help you and your family to protect your financial future. So let's recap. Nursing homes often won't tell you the full story about Medicaid, and without the right planning, you could face having to liquidate your assets, lose income, and even maybe have your home subject to estate recovery after you've died. But with the proper strategies, you can avoid all of this. The big secret, Medicaid's hidden costs can be avoided with the right planning. Don't wait until it's too late. We generally need to do this about 5 years before you would need nursing home care. Sign up for a free workshop or schedule a free consultation today to learn how to protect your family's legacy. Click the link in the description to schedule a discovery call and get started. I'm Mike Smith with the Estate Planning Guys. Thanks for watching, and I'll see you in the next video.